Good day, everybody. Brian here from quantlabs.net. Today's October 17th, 2024. So I'm going to show you all the fun stuff. I've got all the intricacies of this new algo trading course that vasts all the way back, at least since day one. We're going 10 plus years back. You will see some older material in here. Some of it may be even obsolete, but that's not the point of this. The point of this is pretty simple. If you go to my website, you want to learn more about what I'm talking about, to get yourself a C++ HFT ebook free, just go to quantlabs.net/com, press the learn tab to get there, opt in, boom, 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 you're all in. Now, what am I talking about this course? So what this course is to provide a comprehensive understanding of algorithmic trading software focusing on use of C++ and Python for efficient and high performance implementation. Again, that's HFT like, high frequency trading like. So there's a variety of projects, a variety of video demos that I put out with this course. There's no source code included, but just to give you an idea where to go to really narrow down on probably the best in class stuff that I've used over the years to showcase what I've done over the last 12 years and what you may want to look at. And this is another course to launch into the newer membership. I'm going to launch pretty well now, I guess. So this will cover essential topics like market data visualization, strategy development, automated trading tools, and operating system considerations. So again, there's no code included here, but I want to showcase all the things that I've looked at that's fairly valuable in the world of algo trading and HFT like. So as I said here in this post, this is what I posted a few days ago. So I'm going to go through all the detail on all the videos, the topics of these videos. So I'm going to give you a condensed version of each video that I'm looking at and just show you what's included. So the first thing is obviously introduction to algo trading. Most of the people I've talked to have fairly spent significant amount of time in this field, doing this on their own. They may have the work experience, they may have the programming experience as well. So this course is not something you come in and learn from ground up or from scratch. If you already have the experience and are just trying to figure out where to go, what to look at, narrow it all down, what technology, a straight strategy idea, a quantitative method, do I apply machine learning, stuff like that, this may help you out. So again, if you're coming in from ground zero, um, I have some other resources available for that, but this is for more experienced people. So the first thing is HFT definition, um, raising concern in retail traders. So again, uh, these are fairly old, some of them, and you may be surprised by the dates, but they still have relevancy in today to show you what's important. Okay, so again, what is the fundamental algo trading? Very first one. So I discussed the EU or European Commission definition at the time what HFT is. Involves submitting at least 4 messages per second for all instruments or 2 messages per second for a single instrument. It may have changed, but back then that's how they defined it. Could mean that many traders using platforms like interactive brokers are unknowingly engaging in HFT. This raises concern about the impact on individual or retail traders and the market as a whole. So then we have a look at algo trading on the inside. I go over a video I did a while back covering viewers on my YouTube channel about different questions for beginners. C++. So I said Python might be good for beginners, which it still is. C++ or Java might be needed for high speed traders. So you know what I'm talking about there. Then back in the day, I got into really leading trading platforms like MotoWave. So if you want something user friendly, go with MotoWave, and more recently, TradingView on top of that. So if you're going to build out your own trading platform, no, there's a big cost to it. Is it profitable? It's hard to say. The things if you start to lose your way, you have to stay motivated and keep learning in the competitive field. Okay, obviously my site, quantlabsnet.com, could help you out there. So I dive deeper into HFT again, older material, but still relevant. So this has now become a prominent force in financial markets. Actually, I think that HFT, the way it's going, knowing low latency, is starting to take over the industry. It just seems to be more and more out there instead of less and less. Video sheds light on the key aspects of HFT, formal definition, and its implications for retail traders. So, if you're in the trading field, as I will move into other topics of this video series, you'll see why a lot of retail traders unknowingly are getting either squeezed out or losing money over the long run, or at best, churning money. So, these are concepts you need to understand, even if it goes back 10 years ago, 10 plus years ago. HFT often employs market making strategies to provide liquidity and profit. That's still the dominant area where a lot of these operators exist. HFT benefits. It also comes with stricter regulations and technical demands. So, in terms of regulation, a lot of companies now are sidestepping where there's heavy regulation. As a result, they have moved into other jurisdictions overseas that are more, we'll call it HFT friendly. So, understanding HFT for traders seeking to navigate the complexities of modern financial markets. Okay, so then I introduce algo trading strategies, and these can be anywhere from arbitrage, statistical, or fundamental, among the more popular ones. So, this is where kind of knowing some form of technology, if it's Python or whatever you're coming from, this helps to understand these videos. So, algorithmic trading, double-edged sword. Um, so here, I delve in the complex world of algo trading, explores the advantages of algo trading or automated trading, increased speed and efficiency. Also highlights the challenges of developing and implementing an effective algorithm. And I can guarantee you a lot of people will have that. And even if they have some successful trading algo or model or strategy, it's going to change, and it's going to change where it will lose money. Why? Because the market regime changes, or something changes, regulation, or the broker changes, or something breaks. It's not forever. So I emphasize the importance of solid understanding of the technology behind algo trading and recommend resources for those that want to learn more. So that's kind of really what the crux of this uh, course is, or call it course, video series, or whatever you want to call it. All right. So here's a coding demo. So once upon a time, using Yahoo Finance, you could download 4,700 US stocks, um, use a database to create potential pairs, 15 of them. Uh, we need to understand the spread history, individual stock technicals, that's technical analysis, and using visual tools, spread history, and potential entry points. Okay, this is all fully automated as a demo. Uh, Specific pairs, time periods may change on market conditions. Again, nothing's forever. So this is just a simple, high-level way to introduce arbitrage trading and to identify the different potential opportunities. That's still valid today. Um, Next one. So these are example video demos I've had over the years, going back way back when. Another example, demonstrated Python script that calculates various statistics. This is the important part, Yahoo Finance asset. So Yahoo Finance, where you could download the data, is no more, but you could still do it. There's still data sets you can get kind of for free. I wouldn't do it. You will have to invest money no matter which way you go. If it's through the broker, it's through a third party like IKEFeed and other examples. I have other current examples I purposely held back from this video series because I will consider them trade secrets. So once I roll out the high-end membership, then obviously that's where you go to learn those trade secrets and to make it current as well in 2024. So this script in Python used input generates a histogram, uh, outputs statistics and the PDF histogram, which shows the mean, standard deviation, kurtosis, skewness, and positive negative count and standard deviation band. Script works with SPY, Gold, TLT, and pretty well probably anything. But right now I've got something much better. I have shown it in the past, but I've got over 3,000 videos on YouTube, so good luck finding it. Um, that's duplicate. So Brian showcases final stage on algo trading strategy using statistics like standard deviation, drawdown, Sharpe ratio, Sortino ratio, and total margin performance. So Sharpe is what everybody uses, but that's assuming that there's momentum in the market. Over the last few years, you'll notice there's a lot more volatility in the market. So that's where the Sortino comes in. It will continuing along. All right. So yeah, so Sortino is used for when there's volatile markets. So if you're using uh, strategies or bots, as the youngins call it, um, yeah, Sortino would be used, but that's not well known out there. So here I stress the importance of the portfolio performance and using different KPIs to assess a strategy effectiveness or a trading idea that you're discretionary trading or trading it discretionarily. All right, so here's the first mention of MATLAB. Okay, so currently in the last few years, I've not really touched MATLAB because, well, Python has pretty well changed the marketplace where everything's for free, and MATLAB has kind of gone by the wayside. Same with R, even though R itself is free, but you'll see some art videos I got here as well. But when it comes to MATLAB, I still think MATLAB is the number one place to learn from. So if you want to learn quick and dirty, professional documents for both the industry and how the industry uses different quantitative metrics, MATLAB's the place to go. If you want to learn the more efficient ways of doing data science and machine learning, I'd probably say the same thing currently where MATLAB is used. And it's expensive once you want to use it and go into production. It's good for idea generation, but you can still use it for production. I do know a lot of institutions use it, financial institutions, that is. So something you may want to consider. So I have used MATLAB, still use, would like to use MATLAB, but you know, Python has changed everything in that space. Anyways, so here I talk about the statistics and the importance of it when it comes to quantitative trading. A lot of quantitative mathematical techniques are built off of statistics or one of mathematical principles. So here we talk about what the toolbox offers, which is the MATLAB statistics toolbox. We're talking about probability, distribution, hypothesis testing, which is important, regression analysis, and machine learning. Uh, Emphasize the concepts of the different effects that it has on trading strategies. There are powerful capabilities of this toolbox, and I kind of go over them, including the visualization as well. All right, so again, statistics. Uh, I underscore the pivotal role of statistics in quant trading. Essential statistical concepts and techniques, including, as I said, with the toolbox for MATLAB, descriptive statistics, probability distribution, hypothesis, da 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 da. Um, and oh, yeah, it's another duplicate. Let me get rid of that. All right, so here in this video, we talk about OpenBB. Now, OpenBB is open source, but it's evolved to more of a commercial product, and I think they've kind of done away with a lot of the older uh, functions that they built that was open source, and it's pretty well made the product kind of useless. I mean, I think they may have tried to reintroduce this, but from my perspective, they've really done a not a good job on that, and I've pretty well abandoned all hopes on OpenBB, but something to know about. But anyways, at the time, um, there's an emphasis on fundamental analysis. So I'm now talking about fundamental analysis. I believe that technical analysis, fundamental analysis, and quant should be together. It's not like one above over the other, um, because each one is important based upon what you're looking for. If you're looking for strategies, which I do, volatile um, assets, namely in equity. Uh, that's where fundamental analysis will be very useful. Then you can use technical analysis for your timing to put on position. So there's that, and that's how I segregate the difference between the two. But quantitative is very important as well, especially when you move into the derivative area like futures and options. So, anyways, so again, fundamental analysis and stock picking. That's what I currently do. My live trading presents a list of essential metrics for investors and accessible through OpenBB. Highlight the importance of these metrics and using my experience that I wrote with Seeking Alpha on how they emphasize fundamental analysis. So I talk about that, how to apply it to automation and programming. So it's making informed decisions using those techniques and what and how Seeking Alpha uh, basically highlights their articles to be submitted through their editors. So it's just an example of how to do it through automation and the importance of it. Underscore the complementary nature of fundamental analysis with both technical and quant analysis as well. So again, I break down the tech and sorry, the technical analysis and the fundamental analysis. So basically, technical analysis, I don't like saying it, but it's kind of like charting. And fundamental is your economic factors for the trading success. Technical analysis identifies the opportunities through charts and indicators. Fundamental analysis focuses on news and economic data in, impacting asset price. And that can be said for all asset classes. Champions a combined approach for optimal results. I still do to this day. Um, and the one thing, if you were to join or just to look at some of my current groups on quantlabsnet.com, you'll notice that I still strongly believe in macro trends and global money flow. Okay, that's hot capital I'm talking about because that's where the money's going, which means that's where the volume's going, and that's where you're going to get the profit. And that could be said right through the worst of any kind of economy, especially when you look at the coronavirus and all that and what happened to the markets and the impact of that. So you could still make find opportunities using the macro events that come out of that. Obviously, I've done cryptocurrency, so there's crypto challenges currently now as well. Um, I currently would say agree that the CME is very important. The regulated exchanges for the bigger commodity and other future products and option products, because that's basically where the volume will be if things got really bad in the equity space. So that helps in both, equity, futures, options, forex currencies, and even in the crypto trading space as well. So that video explains that. All right, so in here, I don't really cover ethical and regulatory framework. That's something that you have to do on your own. I mean, we have over 100 countries, so each and every country would have their own regulation. So that's something you would have to figure out. So here in the C++ for and Python for algo trading, there's the advantages and disadvantages of each for C++ and Python. Also cover Java, the platforms, TradingView. I also cover a little bit of R, MATLAB, as I've already hinted at, and I'm sure I forgot one in there, Python, the .NET and C Sharp as well, and Excel of all places, because that's pretty popular. A lot of people don't realize that. So this video is about choosing the right language for quant trading. Okay, so basically, um, this is an older video, but still highly relevant. Selecting the right programming language for quant trading categories is based on their scalability, prototyping, research, or live trading. R and Python are popular for prototyping. That's very important. There are some people that still try to do live trading with Python, which is fine, but that's where it's not so time sensitive. But each has their limitations, and with the order management and so on, might be less suitable the R and Python. So again, then the languages like Java, C Sharp, C++ are pretty decent contenders for live trading, each with their pros and cons. MATLAB, as I said, stands out for a versatile platform for pretty well prototyping, scripting, and integration with other languages, and it still does. Um, so that's something I don't think is going to change, but it's very expensive. Personal language ultimately depends on you, the individual, with your own needs. That's important. I cannot sit here and tell you what you should use. Your goal is your goal. Your result is your result. So I can't provide one system, one trading solution for all. Every person has their own needs. It also depends upon your experience level and the factors that you want um, around your chosen broker and the provider compatibility of what language you want to use. So there's a variety of combinations you got to worry about. And now regulation is becoming a big thing where you live. So crypto is a big one where you can't use maybe Binance in your country anymore. And that used to be a golden opportunity years ago for Bitcoin and other crypto smaller altcoins that people became literally millionaires within a few months. So again, so uh, again, choosing the right environment for your trading strategy development. Okay, so this video, what are the best environments for developing strategies and platforms? And again, this is back in the day, but strategies are now pretty well bots, and it's not so easy just to turn on a bot and it's so easy and boom, boom, boom. There's a lot of programming logic goes behind those bots, which are really full on strategies. So here, the time when I recorded this, I would have recommended MATLAB for prototyping before I got into Python. And I think Python's a very good contender if you don't have a lot of cash to use Python. Um, but MATLAB is excellent for debugging and for quick and dirty ways to implement trading ideas. C Sharp at the time, again, would have been the favorite for a platform building because it's easy and it's fairly high performant. And that's now going to be on Windows. But from what I'm seeing in jobs, there's less and less Windows and it's more and more on Linux. So I do cover Linux here, and I also cover a Unix like OpenBSD as well. I'll mention that in another video later on. So again, I keep putting it back on you. The choice ultimately depends on your individual need and preference. Each environment has its strengths and weaknesses, right? So I had a trading algo course, focused on algo trading course and trading bots that I've developed. Some have been very successful, I would say. And I go over the performance of them. Most of them were crypto when there was a go-go days of Bitcoin and the like a few years ago. And looking at Python for algo trading. So I want in this video I share my price and all that, but the course is still around. Okay, Python powers down algo trading. So today I'd still say Python's your uh, go-to language. Um, so here I talk about which language would you recommend. So obviously C++ and Java reign supreme for high frequency trading. Currently, right now, I'd say C sharp, C++ seems to be ruling the roost there. If you want a high paying job, and market demand shows it the last few months on my YouTube, everybody wants to learn C++. Not so much Java. I'm not seeing a lot of that. I am talking to more and more people that are recognizing they need to get into C++. Uh, so Python emerges as a strong contender for most strategies for the prototyping, which I mentioned in MATLAB. The advantage is that Python gives you and still does how versatile the language is and how easy it is to maintain. Um, the back testing, the prototyping, and the various other components that go into trading. Uh, so again, depending upon what you want, depending upon what you want to do, the platform account size is going to play a role. Some people want their ultra low latency. C++ is the way to go. But this is the key right here. If you're willing to go with Python, the key here is if it's less time sensitive, go with Python. And I've done that. So again, I recommend exploring. I had a book out that kind of covers that, but this course kind of replaces that. And I've got various webinars and stuff. But again, all of that is encapsulated here in this course. It's the whole point of it. Okay, math and the numbers regarding algo trading. This is another way of saying quant. So here I mystify the essential math for algo trading. um, this video covers the statistics, probability distribution, hypothesis, and regression analysis. Those are usually what the retail traders do, and then there's the really deep calculus and algebra and all that fun stuff, and really deep being in the weeds kind of math. And that is important, but it's really more specific for futures, credit risk, more institutional stuff. But it's still down the road, good to know what to go with. I think uh, you have to know these concepts to really build out a diverse and robust trading strategy, meaning that the strategy has to be able and universal and bulletproof to work in any condition. Um, and I'm going to go over some of those type of strategies later on. So I've now one half hour in this, and just goes to show how vast this is. There's a book out there called Stock Market Math. You might want to take a look at to understand that. Okay, so there's machine learning, which is now pretty well taking a lot of this stuff out. But this was done years ago. So these are the early days of machine learning. One example, energy trading. So this is a MATLAB example, uh, how machine learning affects energy markets. So this is going to be currently probably the crust of it will still be relevant. Obviously, it's going to be more evolved, but just knowing this in live trading environment helps you out to understand how the institutions do it, namely big oil companies. So we outlined the process of building out machine learning model, data acquisition, and feature engineering to model and train the evaluation. So that's all pretty well done in MATLAB. So I stress the importance of the domain and intuition of crafting these kind of trading strategies. So this again is built for energy space, if you want. Um, so here, uh, reshaping the financial landscape. So big changes have happened recently in the impact that algo trading has had on the overall financial institute. I've talked about, as an example, how Goldman Sachs has transitioned from a traditional bank to a tech-driven firm, and how those trading jobs are being automated. So if you're a traditional point and click kind of trader, you're probably out of a job and out of a career unless you catch up to automation. So if you're my age, you're probably out of the field and into something different, because you just don't feel you have the technical chops to get into it. But there are people out there that want to delve in this and know as a fact that it can change their life in terms if they decide to do this on their own, which a lot of people are kind of waking up to, um, and going out and building out their own trading operation for their own capital that they save or earn or whatever. So as I said, there's technical skills like uh, Python programming. The basics of it is the essential part to remain competitive in the field. Now, remember, if you're from the West, you're going up against people from places like India, China, throughout Asia, really, and they do it for much less than you are, and they're going to be probably younger and have um, more do it for a lot lower than what you're used to being paid out on. On the other hand, firms that pay out in the millions per trader, per technical leader. I've done many videos on my YouTube over that. Um, so I discuss the challenges that human traders have competing against these algos and potential job loss. Now, I'm not just saying job loss; I'm talking about career loss as well. So I show the growing use of AI and its implication on the future of the industry. So that is something that you can't really change. But if you wanted to learn the technology, that's what I do. To help people out like that to transition into that. I've talked to a few people that are learning and identify C++ is a crucial language to know to get into HFT like trading, high frequency trading. So here we talk about breeding grounds for a profitable Forex trader. There's a lot of Forex retail traders out there, and they're getting burnt left and right being on these retail shoddy Forex brokers. And it's the same can be said probably with a lot of the crypto brokers out there. But with interactive brokers, I feel you don't have to worry about that. So being on something like interactive brokers may give you a higher chance to be profitable in Forex if that's where you really want to be. I think futures and currencies probably a better place to be. Um, and so there are clientele that are obviously moving to algo trading. MetaTrader for all the years has taken over everything. Um, and there are forums built for this, like TradingViews now become one of the number one trading platform, even in the Forex space. Uh, so of course, the automated strategy is very important, and I'd encourage anyone to continue down that path. Um, so let's move into now visualization. So these are the different major concepts that go into a trading platform. So if you were to build your own, there's a whole slew of trading libraries you can go through. I just put up one video on side chart and lightning chart and the like, but these are more of the affordable ones. But let's first talk about market data. Okay, so I've talked about fundamental data, I've talked about technical analysis data, but if you are needing to know anything about Federal Reserve data and data sources, it's good to know, especially now with the economy going into a major grind down. It helps to figure out from a macro level if you should still be in the equity space, as an example. So here we there's examples, and a lot of the data is free, available through the Federal Reserve. So you can get economic snapshots, analyze charts on things like unemployment, GDP, industrial production, consumer sentiment, all important. That helps not through the news, not through the media, but raw data. But even still, some people are saying, and I still kind of support this view, that a lot of data coming from the Federal Reserve can be somewhat manipulated. There might be other alternative sources out there, but using it, this is specifically using it from the Fed. So there's an impact on a trade war with the U.S. economy. Don't need to go on that on the political front. Do you have low unemployment, steady GDP growth? At the time when this is created, everything looks good. Um, so rising interest rates, now they're dropping them because it got too high. Blah 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 blah. Okay, so here is another source you can go using C Sharp and Quandl. Back in the day, Quandl offered fabulous resources for coding. This is where I'm showing C Sharp and .NET on Windows. Not sure where it's still at with this, but at the time you could get the data and the coding samples. So guide viewers on leveraging C Sharp .NET API to download free government data from Quandl. There's a downloadable spreadsheet listing Quandl codes for such data. Then walks through a C Sharp console app to download it. So there's a Quandl client, configure your API, and C Sharp API fetch the data. It's a valuable resource for anyone wanting to unlock free government data from Quandl. Okay, so there's another resource as well called tradingeconomics.com. Do the comparison. This is good for Forex trading as well, retail Forex. Trading Economics offers more comprehensive, up to date on economic indicators. So there is for sure a API for Trading Economics. Obviously, you have to pay, no different than Quandl. Um, but here you can get government bonds, central bank, balance sheet, manufacturing indices. Those are so important to understand the impact that it has on a country's currency. Obviously, that's really helping you forecast the direction of a particular currency. Quandl has free options. Trading economics provides a wider range of data at the same price. So trading economics might be the one you want to look at. So another big challenge, and this is using MotiveWave, and I purposely demonstrate this on Linux to show you why I like MotiveWave at the time. And this can be said also for TradingView on Linux. Um, the data and what data sources are good. This is now for equity, stocks, and ETF. So there's a difference between IQ feed and DX feed. Most people know about IQ feed, but a lot of people don't know about DX feed, which is German. So I compare the two. Um, IQ feed was the superior option, but at the time I did make a choice to DX feed because there's better Linux compatibility with DX feed. So I guided people how to set it up on MotiveWave and importing portfolios from something like Interactive Brokers, probably the very popular retail broker. DX feed provides a slightly higher cost, more features, superior choice for Linux users, and a lot of people want to move to Linux. Seamless integration with MotiveWave. That's the advantage of MotiveWave, among other big advantages with MotiveWave. So there's a breakdown for backtesting, which is historical data and real-time data. So we'll cover both. So for historical US stock data, IQ Feed with Python was good. Step-by-step guide for IQ Feed and Python to download historical stock market data. Necessary tools, IQ Feed Mac client. I was a Mac fanboy once upon a time. But no more. I'm on back on Windows and Linux, preferably Linux. But the way Windows is set up, where you have the Windows subsystem Linux, you can do both. And again, it's seamless. And you can do it right out of an IDE like Visual Studio and even VS Code, among other um, popular IDEs, the Integrated Development Environment, Visual Studio, VS Code, and the like. Video guides viewers through a setup process and demonstrates how they download historical data for a specific stock works. There's other tools I mentioned in this video series, which is much more effective being on Windows. Um, so here is what I should highlight. And again, this is old info, but a lot of the software I'm using is still current. So the challenge of other languages like Java and emphasize the advantage of Python for this type of task. So now we need to know, I believe this is the real time. So I equip viewers using IQ Feed again, using a tool that is specifically for Windows and nothing else. It doesn't work on Mac or Linux. The advantage of this particular tool with IQ Feed. So here you can download data, minute, and tick data even. The same tool will allow you in real time to collect data um, and have volatility indicators and historical view for viewing historical charts. This empowers people how to collect and analyze market data effectively if you want to use IQ Feed. Okay, so that's all fine and good, but now let's talk about data cleaning. Now, I've got two professional presentations in here, one for Dr. Ernie Chan, and this one uh, is a presentation that he forewarned people on about using low latency data, and if you're trying to back test it, it basically will most likely will fail. Demonstrates how the data can mask risks and overstate returns. Okay, that's a problem of back testing. But again, this video series has some solutions for you if you're willing to put the work in and bring it up to date. I'll talk about that in a bit. So if you do these kind of concepts with low frequency data, it can mislead and give you optimistic results. So it's more accurate and reliable back testing. So you have to use higher frequency data, and I can show you that in TradingView on various ETFs. Um, it's a must watch for those interested in quantitative trading from one of the most well-known guys out there. All right, so here is a particular bot that I developed back in the day. Um, and it goes over crypto trading when, again, crypto trading, specifically Bitcoin went through its go-go day. 800 trades, 48% win ratio since I launched it. So I go through this. So I show the order book driven bot. Okay, so I do cover kind of order book, which is essential if you're going to move into HFT. Um, we analyze the different coins, profit and loss, and controlling daily return targets and throttling mechanisms. That's important. As you get a trading strategy that's very successful, you still have to limit its risk and its exposure to retain the profit. This is an example of it. And again, this is dynamic in the crypto market space. If you're starting from ground zero and you develop a trading bot or strategy and it becomes successful, these are the things that you need to consider to see if it's even worth trading the bot as the market regime changes in what you trade. Okay, next one. Again, analyzing market performance with stats function. Okay, I'm not sure if this is MATLAB again, but here I demonstrate stats functions uh, over the last year at the time. So we analyze IBM, Amazon, and HPE, compares the returns against the standard S&P benchmark. There's a visualization component and the distribution of daily returns to provide a comprehensive overview of the performance. Again, this is for learning purposes. Again, I keep stressing there's no code in this video series. It's just 100% videos and resources to pick up from if you're interested in specific areas of what you see here. Okay, now I've also mentioned about data visualization earlier. These are the affordable options out there. One is DevExpress, again, .NET. So at a point, I love some of the .NET stuff that was out there. Um, and this is one of those options, one of those libraries that are really good. Um, so I introduced this DevExpress. It's a .NET UI, user interface development framework. Sample stock trader applications showcase the framework's capabilities, crafting visual appealing interfaces. There's more sophisticated than this, but you got to pay, right? Video highlights, charting, data visualization, and cross platform support. Some of these currently have moved into providing JavaScript support as well. So, again, for real time now, this is the real place where you pay for these type of charting frameworks. Uh, so, showcasing the impressive real time charting capabilities using, in this case, WinForms on Windows. Highlighting the control speed, responsiveness, and ability to handle large data sets. Could be said about other more up-to-date libraries I've mentioned or frameworks, SideChart, Lightning Chart, and the like. Um, explores the extensive customization options available, various chart types, indicators, and annotations. Provides a compelling overview of DevExpress charting controls and valuable tool for charting platforms. Now, if that one's too expensive, there's another one that I've recommended, and it's kind of open source using open source C++ libraries, and this can run actually on Linux. So these are using WX widgets, the framework, which is more GUI, graphical user interface, merged with this particular commercial, but yet affordable uh, trading charting package. And it's all done in C++ and using another thing called WX Crafter. So creation of financial charts in C++ using WX widgets and the WX Crafter plugin from an IDE called CodeLake. This could be, remember, some of these videos are fairly old, so they may not be up to date. Introduce the, we'll call it the trade secret library to generate the chart, then guides viewers through creating a basic C++ program or chart generation. Again, this is on Linux now, which is very limited to do. WX Crafter plugin showcases the designer user interface visually. Video concludes compiling and running the program to display the financial chart. A Python toolkit for professional for charts. So again, we're moving from C Sharp, .NET to C++, now to the easier Python. So this charting library, it's the same as the C++ because it's multi-language, supports many languages. Uh, so the installation, basic usage, key features, showcase and creation, line bar, financial charts are covered. This video uses this create secret library, we'll call it, ability to add technical indicators and custom chart appearances, making it a valuable tool for those seeking to create professional looking visualization in Python. And there's many others, but this one's pretty good. So again, same chart, but for C++. Comprehensive solution for various charts in C++, including line bar financial charts. It crosses languages and affordable, make it an attractive option for developers seeking pro-looking visualization. Again, cheaper, much cheaper than something like DevExpress or anything of the like. So here we're now using Qt Creator. Qt is not my favorite because of the licensing is very, very restrictive. If you want to go out, develop something and distribute it with Qt, you'll be paying into the thousands dollars per year to do that. So Qt is not my favorite. That's why I prefer a true open source, very friendly to developers, WX widgets. Um, anyways, this demonstrates the integration of this library with Qt Creator on Mac. So Mac is very limited in what you can do programming wise. JavaScript changes that. I'm not a big fan of JavaScript. I think any real developer does not like JavaScript because of there's really no it's too loosey goosey. And there's a lot of compatibility and bug problems that come with JavaScript, so it's not my favorite. Done right, fine. But trying to integrate things, it's kind of like, oh, don't want to go through that. So we successfully and run the demos on a Mac 10 machine, Mac OS 10 machine. So there were previous challenges with Linux because Mac is kind of built off of Linux and Unix, and successfully resolved the compilation issues. Uh, so this underscores the ability to use Qt Creator on Mac and generate these charts. Now, everything may change now because it's an old video, but I still would be very leery using uh, Mac. Just that's my opinion. Anyways, so now we get into technical analysis. Okay. So again, this particular one, this library is open source. So it's open source, Python library for technical analysis. So this identifies candle patterns, current state, 2021. So this is kind of, it's still current for sure. Key takeaways, the access to technical indicators through something like Python or what it's written in C++. It's a pattern recognition, recommendation for pattern. So patternstate.com, if you're into knowing what works on probability, this is an excellent resource, just so you know. Downing suggests modal way for backtesting, acknowledging, yeah, this open source library will have its limitation. It's open source. Video offers valuable introduction to this library and potential for Python-based technical analysis. Okay, so we got to demystify this library. So it's a popular C++ library for technical analysis written in C++, but how do we get Python to talk to it? So we demonstrate it, calculate some simple indicators like SMA and Bollinger Band, and build basic strategies out of it. This makes this tool very valuable for technical analysis if you want to create or research or whatever with Python prototype. Okay, this is the interesting part. So, as I said before, there's a lot of emphasis on back testing. Real professionals don't do back testing. What they'll do is they'll build out simulators to test out their trading model. How do they do that? They use simulators, stock exchange simulators, future market simulators, and there's a few out there that are open source This particular one I'm talking about is I can't find it. Um, but I just want to show what it's used for and why you'd want to do that. Fortunately, there is still one library. It's what may way more sophisticated. These are built in Java. Um, and if you're willing to put the time into building out this kind of simulator and then building a framework for a model that you develop, this would be an excellent resource to have to test that model in a real trading environment that you have within control and you don't need to backtest. So here we have a free based market simulator, and there's lots out there currently on GitHub. I can't say which ones are good or which ones are limited. Again, that's up to you. But it's something that might be worth investigating down the line once we get this membership up and going. The Quant Elite, you can do it now, but to make it very valuable, this is one of the things you want to know about because a lot of people do not talk about these simulators. So what you can do is you can have users that are virtual and simulated that will place orders, view quotes, and analyze market data. Um, enables the ability to simulate complex market dynamics, making it ideal for testing trading strategies in a controlled setting. If you go into another speaker that I've brought in, you'll know what I'm talking about when it comes to volatility and specifically implied volatility to forecast from that volatility. Um, there's that. Okay, so just wanted to lead into the microstructure of things, but it goes deep with this type of simulator and another one that you'll know about when you join this video series because I'm not part of the idea here to talk about it, but it's revealed when you those are trade secrets. So this one's important as well for spread, um, specifically using Interactive Brokers API. So if you're going to do things like long, short pair trading, um, understanding how to leverage the government data, database queries, and okay, it might not be Yahoo Finance, but that's it. There's other resources out there. You can get same data, but better data, very low priced that I purposely hold off within this course. So here you can get potential pairs on what to trade based upon, let's say, metal might be the next big up and coming sector. And you got a week to pair trade this strong metal producer against the weak one or gold or whatever. So we cover the evaluation of these pair performance, offering tips for strategy optimization for market conditions. That always changes. Market regime changes. Again, that's the value of these type of videos is to take away that knowledge and knowing what to look for to lay out the foundation to make it more successful and more profitable. Resources valuable for those seeking to master pair trading using something like the Interactive Brokers API. And I have many demos with Interactive Brokers that I'll further talk about. We're just getting started on the strategy analysis. Okay, so ranking metrics for long, short spreads. Okay, so here we rank metrics, no different than factor model trading. We use long, short spread trading. Here we can use an Excel spreadsheet. Lots of people like their Excel. They scan US markets within, let's say, closing fund debt USA. Video highlights key metrics for identifying strong and weak performance, including market cap, EPS, volatility, ATR, average true range, and various statistics. Okay, so the data source I'm not mentioning here has all that as part of their fundamental analysis data on every single stock and ETF out there. So ranking this is crucial to measure things like market cap, EPS, volatility, ATR, sector specific considered the most important. You also want to look at the weakest possible shorting one as well. And guess what? That's what arbitrage is about. This empowers viewers to select long and short candidates for potentially profitable spread trading. Hmm. Okay, then we have intraday. Now, these are just some examples of over thousands of videos that I've worked on YouTube on this Quant Labs channel over the years, 10 plus years, and there's thousands of these videos. Okay, so there's now exploring high frequency trading or HFT trading like. Uh, so here we're trying to maximize Sharpe ratio, intraday Sharpe ratio. So we're trying to find ways to boost intraday Sharpe ratio based upon what we're trading. So using the HFT unlocks opportunities if you can, a multi-second unavailable to slower trades. Markets become more automated, emphasizing these. There's advanced algos out there, systematic approaches to stay competitive. That's what the HFT firms are doing. There can be simple algos for calculating maximum intraday Sharpe ratio, critical metric for HFT strategy evaluation. Again, where else have you heard this, or did you know this is something that's real? Optimizing trading frequency with the algorithm. Viewers gain insight on how to maximize profit. I show the same thing using something like TradingView as well. So even you don't have to know the programming behind it. You can simply use something like TradingView to do that, and to see what frequency you should trade on, what you should trade, and when to trade it, and so on. But it's a variety of factors. So this is valuable information on HFT benefit and importance of advanced algos for successful trading. Okay, so this here is another intraday analysis, specifically using in the go-go days with crypto, but among multiple altcoins at the time. So this is using CoinMarketCap, leverages a custom script to identify cryptocurrencies experiencing significant intraday gain. So there's a snapshot of top 10 gainers, which are all altcoins here. Here's their intraday moves. And if you know about them, those trends can usually stay for a couple of days. So you get some technical analysis tips. So for example, in this case, number one, Walton chain, which may not even exist, may not be relevant anymore, but at the time it was. So you get the bullish hourly 5 minute average. Remember, past performance doesn't guarantee future results, especially in crypto. All right, so we are now moving into behavior. As I said earlier, there was a second presenter, Dr. Paul Futrell, about 9 years ago, talked about topographic finance method for visualizing three-dimensional volatility surfaces. This can be highly useful in futures and options markets. See uh, potential profit from a forecasting point of view. Traditional option volatility surfaces offers a deeper insight into pricing dynamics. That's why it's under behavior. Uh, by examining this in 3D, uh, Dr. Control aims to bridge the gap between qualitative and quantitative analysis, providing a more comprehensive understanding of market behavior. Again, when it comes to behavior, there's also from one of the recommended futures and options trading course I put out there from UC Davis. This is just one small aspect that is really critical for retail and uninformed traders out there, specifically in the futures market. So expose the statistical reality behind option and futures trading. Identifies three participants, the hedgers, who are the break-even professional speculators, which are usually the banks or the hedge funds, because they have the inside information. They're the profitable. Then there's the amateur speculators who consistently lose. There's different attributes that trigger amateur losses to the lack of understanding about market statistics. Okay, so that's why I'm doing the course that I mentioned to prevent that, to give you a better overview on what to look for from a data perspective not just to stay profitable, but to stay highly profitable and consistently profitable instead of uh, taking profit and then giving it back to the markets, no matter what you trade. Then we move into strategy development techniques. Pretty well, a lot of it's strategy development, but specifically based around statistical modeling. This includes linear time series analysis. So some examples here. All right. So the first one is looking at order management on the Interactive Brokers API, intricacies of using it to modify and cancel orders, which that's just giving me a headache thinking about it. There's challenges in negotiating the process of it. It's often overlooked in the official documentation. I know about this because somebody on the inside showed it to me over the years. So what we're talking about is covering essential parameters like unique order IDs, order IDs, and parent unique IDs because of the chain to it, and understanding that before demonstrate how to place these and how to sell orders using C# API. And it's just an API. So it can be done in any language supported by Interactive Brokers through their API. There was a piece of software in .NET with C# called TWS Link 2, which was really good at this. And there's some configuration troubleshooting you could have used with it. So I showed the demo on purpose, even though it's no longer supported and you probably can't even get a copy. By the time it was a very powerful piece of software to own. So the must watch for those seeking efficiency in Interactive Brokers order management. Again, coming back to Forex pair trading using statistics, comprehensive statistical analysis of various Forex pairs. In this case, we're using a Python script to analyze historical returns, presenting the results in charts and tables. That's what Python's very good at. Covers return distributions, average returns, standard deviation, kurtosis, skew, and positive, negative returns. Those are pretty important elements, no matter what you're trading, if it's just Forex itself or if you're doing futures and currencies. But when it comes to skewness and kurtosis, those can be applied under the Greeks, under options trading as well. So there's some examples here of the Euro Hong Kong being stronger than something like, in this case, at the time, the US dollar and Japanese yen, which was underperforming. Valuable resource for those seeking to understand statistical properties for pairs trading. Everyone has their own technique on the retail Forex side, do what they want. Just one example of it. So again, we showed the statistical toolbox. This is a different video. A potential tool quant analysis. This is now again using the MATLAB statistical toolbox, emphasizing statistics, financial modeling. The toolbox can be built to use predictive models for financial analysis, data visualization through histogram, scatter plot, and surface plots are also demonstrated. So surface plots are the same thing as what Dr. Cottrell showed in his presentation. Also, there's other things that you may not know about, leveraging the toolbox for statistical tests, t-tests, f-tests, and even explore advanced features like machine learning, parallel computing. Now, this is an older video. Back in the day, this was just coming on board for both machine learning and parallel computing. Okay, so now we get into that. Machine learning, again, using the popular techniques, neural network, random forest. This is just like touching the tip of it, but it doesn't cover extensively all the machine learning out there. Again, this is just older videos using something like MATLAB or whatnot. Okay, so here we look at machine learning fundamental trading. And at the time, contrasting machine learning and neural network with a fundamental approach. And that's how they use it by professional traders at that time. Things have evolved, obviously. Machine learning had potential for idea generation and screening whatever assets you're looking at. Emphasizes the primacy of understanding supply and demand principle. I believe if you took that UC Davis course, you'll know what I mean. Everything is built around supply and demand. if it's news that's impacting it or some kind of other exogenous event or unforeseen event. There's a valuable perspective for those that want to have a rule in machine learning and offers essential views on the topic among experts because they use MATLAB. So again, another principle is PCA with MATLAB, principal component analysis, and how MATLAB implemented it. The PCA framework ultimately settling on two most effective techniques, demonstrate the PCA functions in MATLAB interpreting the result. Covers non-linear PCA neural network based framework. That's part of the PCA framework. Non using neural network uh, as well as part of it. Uh, so again, that's some of the advantages you may get with MATLAB. Another one that was getting popular at the time that is popular, I don't know if it still is deep learning with a financial time series. So there's a research paper called Deep Learning Framework for Financial Time Series using stacked autoencoders and LSTM. So there's the LSTM and SAE discussing indices using Hong Kong, Tokyo, New York, and India, and different methodologies that involved wavelet and Fourier transformations. Video highlights the prediction approach, comparing different time series and modeling. Again, this is how advanced it can get. Unlike WSA LSTM, model emerges as a top performer in accuracy and profitability. That's why it's been popular. Valuable resources for those interested in deep learning applications for financial time series. So now we can move into crypto at the time. Again, a cryptocurrency with machine learning, forecasting using a random forest regression and PCA. Dissecting the functionalities and limitations, showcasing this with a Python scikit learn library. Of course, that's open source and free. Emphasizes the crucial role of data preparing and feature engineering, highlighting their impact on prediction accuracy. World data set comparison reveals random forests are the champion in terms of accuracy and forecasting power. Viewers that want to explore this type of machine learning for analyzing cryptocurrency markets. So again, then we focus on crypto trading bots with random forest. Again, there, as I said, there is no source code provided. These are just techniques from within the video themselves. We explore random forest for crypto trading bots. Compare random forest to other machine learning techniques like PCA and regression. Delve into training and random forest modeling to predict the crypto trading prices. Showcases being trained on a data set of 23 cryptocurrencies, incorporating factors like open close price, volume, technical indicators like RSI and Bollinger and EMA. Evaluates the model performance, demonstrates the ability to predict crypto prices with high accuracy. How valuable would that be? So again, if you're interested in building crypto trading bots to leverage the power of random forests for price prediction. Okay, one more. Consists three machine learning techniques for market forecasting. Again, a random forest regression and PCA. Conduct extensive research and analysis on these techniques and effectiveness in predicting crypto prices. Basic with each technique, how and why they work, and their strength and weaknesses. Demonstrates the implementation of each language using the Python library, again, scikit, showing how to prepare, feature engineer the machine learning, and the quality of the data will have a significant impact on the accuracy of your prediction. So again, it's best to work with your broker data because, your crypto exchange, because the crypto over the span of different crypto exchanges, those prices can vary drastically, especially in Bitcoin. So always work with your broker data or exchange data. A video is a great resource for who want to learn more about machine learning techniques for market forecasting. It's not just useful for crypto, for other asset classes as well. So again, we get into backtesting and performance evaluation. So this one is using a popular library in Python for backtesting and trading strategies. So we compare it again with older frameworks like Quantopian and Zipline. Uh, this is basically an engine showing the features for live trading support, data feed, and technical indicators. Demonstrate the backtesting simple moving average crossover strategy, simplest out there, covering strategy definition, data loading, and backtesting execution. Concludes with analysis of backtesting results, valuable resource for those seeking to backtest their trading strategies. So if you're going to invest in this, it's fine. But I've also got videos on, as I said earlier, the market simulators that they may be much more useful. Now, this is what I think probably the best tool out there for backtesting and the simplest and most effective at the same time is TradingView. Robust platform for technical analysis and backtesting trading strategies. It's way much more affordable than something like MATLAB. But MATLAB comes with many, many other features out of box and the documentation to go with it to learn what institutions are doing, namely hedge funds, other trading, professional trading firms. Simulating historical data, backtesting enables traders to assess performance of their strategies before taking real risk, risking real capital. Delves into intricacies of backtesting on TradingView, understanding the fundamentals and optimizing the strategies you develop. Again, that's, as I said, if you go on my playlist for TradingView, that's in PineScript. But it's a good way, a good path to go down if that's what you want. That's what that's why I created this video series to showcase all the different technical um, tools out there to use to see what fits your goals. Backtest your way to profit with MATLAB. So this is the powerful thing and why you would want to pay high end for MATLAB. Automate your backtesting for optimal trading strategies. That is very possible in MATLAB. How to use MATLAB to test and refine your trading idea. Import data, create strategies, market performance, and optimize parameters for maximum profit. I will tell you there is a toolbox out there with MATLAB where you feed it the data and it will tell you what kind of strategy you need to optimize for potential profit. That exists back then, should exist today, and maybe there are more toolboxes out there with MATLAB that make it even better than what I'm stating here. Next one, again, backtesting on TradingView. So again, we now are moving into TradingView, the PineScript language. The significance of backtesting and guides viewers through the process, covering performance metrics. Now, this is from out of box with TradingView, net profit factor and drawdown. Very important over the long run. And that's what I use currently to know what is profitable today over the long run if you're doing a buy and hold type of strategy on an ETF. And a lot of the ETFs don't meet the metric when the US markets get challenged. This resource is valuable for those seeking to master backtesting strategies on the trading platform. Again, this whole video series is highly valuable for anyone just getting a high level picture on what to use, where, generate ideas from what you watch on this. Some of it is older, but valuable. So again, another video on backtesting with TradingView. I think it's still one of the best environments to do that with real live data outside of the convenience of what something like MATLAB can give you. Covers the basics of backtesting, strategy creation, parameter setup, and result analysis. So here we're using a simple moving average crossover, which, as I said, is the simplest, demonstrates how to run a backtest and interpret the metrics. How to customize a backtest with specific dates and visualize trading signals on the chart. That can involve just changing something like The time frame with TradingView, you can go all the way down to sub-second if you're willing to pay for it on a monthly basis. But out of box on the premium, you could pay for $70 a month and get down to like 10 seconds of data. No one else does that. No other platform gives you that. Resources valuable for traders and investors seeking to test their strategies using risking real capital. And again, there's no programming needed to do this type of analysis. Okay, again, coming back to MATLAB. MATLAB and TradingView are probably the kings in all of this out of convenience where there's not a lot of programming needed. If you're willing to pay for either, as I said, with MATLAB, it's a lot more pricier once you want to go into production. So the MATLAB one explores the risk management of MATLAB, highlights resources like webinars and courses that were at the time of this recording on the video, dives into practical applications, as I said, for both. Again, this is an institutional level for oil trading firms or oil firms like Exxon themselves for energy trading and credit risk, which is one of the big ones where institutions will trade. Downing emphasizes techniques like conditional value at risk, and you'll hear about that a lot when you apply for jobs. So knowing this alone will help you in applications when you send them out to trading firms because you can learn from this. And there's other obviously tools to learn further, but this will help you tackle how to do risk management on what the institutions do. And remember, MATLAB's never talked about, but it is a popular tool among a lot of the high-end, high-paying trading firms out there. Okay, so now I'm not going to cover strategy design patterns. I think a lot of it's already covered in the video series. Let's talk about further risk management. So again, risk management toolbox, custom risk management tools. Kelly criterion is a big one. Position weighting calculators. Assess your market risk, investment amount, balance, portfolio beta. You could probably do this in Python, but there's a lot of hodgepodge projects, open source that you got to go through to find what works for you. Again, stop loss and take order profits or take profit orders. Again, if you want to automate this, there's a custom risk management tool, including tools like, or indicators, I should say, beta, Kelly criterion, and position weighting calculators. Tools assess asset risk, size of investment, and balance portfolio beta. So the beta is important, but more obviously you're there to do that to generate alpha. So there's the code, automation, and trading edge through the data-driven risk control. So it comes back to data-driven, what the Fed uses as well. Hey, another one that's popular is Fibonacci using a visual guide. This is coming out of the Forex world, retail Forex world, and CFD and the like. So there's a lot of people spend a lot of time on Fibonacci, analyzing entry, exit, stop loss, take profit. Covers, as I said, CFD, crypto, and Forex. There's different charts, the hourly, daily, which Fibonacci levels to use in the application of identifying potential profit, entry and exit points, demonstrating the virtual stop loss and take profit, offering tips for high potential chart selection and avoiding chart limitations. So if you're into Fibonacci, this is a video for you. Okay, so then we get into MotoWave, looking at stop loss analysis. So automated trading strategies with MotoWave, the trading platform, built with Python, featuring stop loss parameters, entry lot, flexible exit points using break-even ATR trailing stops. Out of box with MotoWave. Witness the refined MACD reversing strategy in action. That's one of the most effective ones that I've seen, and its potential trade with the results. Testing and adaptation are key. So we've talked about that in various topics here. And access the source code and empowering algorithmic traders and leverage MotoWave and Python for strategic automation. Again, when it comes to a lot of the available code out there, some of these videos, I'd say It's hard to say. I think many of them will not have the source code available anywhere. Just to put that out, there's a caveat, but just to learn again for idea generation on what to look for when you go on to, something like GitHub for coding samples or actual tools that will help you analyze using the data sources and brokerage sources that you use. Okay, so again, a very important uh, uh, concept here. A lot of people don't talk about, as I said, value at risk, which is throughout industry, and expected shortfall. So a lot of this is using MATLAB again. So here we're using the MATLAB financial toolbox, optimizing portfolios using the conditional value at risk, CVAR, significance in risk management, and guide viewers through creating a portfolio optimization model using MATLAB. And again, knowing about this, you could probably go out on GitHub and find something equivalent in, I don't know, Python as an example. So this demonstrates defining assets, setting risk tolerance, and running optimization and interpret the results. For example, optimal weights and CVAR. There's included in this toolbox is visual techniques using MATLAB plotting function. Again, resources invaluable for investors, financial professionals seeking portfolio management and CVAR in something like MATLAB. So, mastering risk with MATLAB. There's so much when it comes to MATLAB. It's not a joke. So, MATLAB is used for a variety of reasons. Risk management is one of them. There's different resources uh, online available. Again, at the time this was recorded, which would probably be pushing 10, 12 years. So they have webinars, courses, showing you where to go to do, again, energy and credit risk using CVAR and some book recommendations for these topics. Yahoo Finance, not sure if this is really worth investigating, but here, uh, as I said, there's no more Yahoo Finance, so I'm going to skip that one. This is an important one now, especially when things go real flat, they go sideways, like crypto winter, Bitcoin winter can happen, but you can still trade Bitcoin in a mean reverting market. So, what does that involve? So, I explain mean reversion strategy for forecasting, trading models, uh, using something like R. Oh my, first time I mentioned R, with examples ranging from 2006 to 11. Video offers a glimpse of all that fun stuff with different topics on mean reversion. All right. So continuing along, we've got trading platforms themselves. I've already mentioned TradingView and MotoWave. So in prior videos, so I talked about them. But here, let's talk about the options available for open source. So this could be QuantLib, which is usually for options trading. A lot of firms use it. Zipline, I don't know if it's still used out there. And the more recent one, OpenBB, which I've already mentioned. So there's how to install it, which is a set at the time, open source Bloomberg terminal alternative. That's what BB was, Bloomberg, on Windows 11 using Docker. How to set up the Docker desktop and download the image of OpenBB and access back then. And I think they're trying to still reintroduce this currently, OpenBB terminal. Uh, Valuable for those wanting to leverage what at the time OpenBB offered. Um, but I don't know if it's still current or not. That was not long ago, honestly, maybe 2 years ago, and they changed it so radically. Oh, okay. Anyways, continuing along. So we have an HFT journey, open source courses. So again, this is with C Sharp. Um, Budget friendly online courses, open source tools for high frequency trading, C Sharp based development using QuantLib and the old school. And I just verified you can, if you look for it, the trade linked trading platform, which is open source at the time. It's going to be old. You may be able to find a way to get it running, but if you can, there's some tools out there. Also, do check out QuantLib Excel and the functions that come with that trade link as well, and the potential of it in integrating with something like R and MATLAB is pretty good. Also, another option I did check, it's still on GitHub, but it might be an older version of Java. I don't think it's been updated for a while, a couple of years. So there's one called AIO Trader, free open source Java program, just to take a look at HFT simulations. Uh, the charting is pretty impressive. So you can get, well, Yahoo Finance no more, but interactive brokers and offer indicator customization. Not real time, slightly dated, slightly long time dated, a powerful tool for HFT exploitation to look at. Okay, so again, the order book. Um, this is the heart of high frequency trading. So you look at an order book, get a real time record of how the buy and sell orders are fueling high frequency traders. There's a data accessible all through Interactive Brokers API, but that will be delayed. It's not real time. That's why you have to be on the exchanges where your uh, high cost comes from. To be on something like a equivalent of a CME, TradingView might be an option because you can see that data on TradingView. I've shown videos on that. So you can see trading opportunities and execute orders from those optimal prices. But order book changes a lot, can be noisy, and this is where the market making predictions come in and why a lot of the high frequency trading firms do that. Solid introduction to order book and their role in HFT. So here, I kind of worked on that with crypto using Binance back in the time when you could do it. As it said, the go-go days when Bitcoin went from 20 to 60,000 in a couple of months. New crypto trading bot boasting a 66% win ratio because of the high momentum that that time range brought. High performance altcoins, the bot leverages the supply and demand strategy. So again, if you got something that's in high demand, going pretty well parabolic, this is the kind of trading bot you want based around that supply and demand. And again, emphasizing global money flow analysis. That's why I do it every day, using something like Bloomberg for what they call basically informed traders. And those informed traders are spending thousands of dollars per month to get to that point where they are informed. So currently, and I don't think this will change ever again, crypto volatility and potential regulation, which we're already at, using new strategies and analytics available. But I think crypto is one of those things where I don't put a lot of tension on, whereas opposed, I'd rather be in the futures and options market where a lot of the volume and trading opportunities lie. I'm currently doing the stocks and ETFs. So using the C++ API for interactive brokers on Linux is a big challenge. So the API with the TWS support on Linux was a challenge, but I found a GitHub project. Is it still current? I don't know. But if it is still valid and it's very valuable, guiding viewers, setting up the environment, the libraries, and the current API settings, and even placing an order through the C++ API from interactive brokers. So if you're a Linux user wanting to know this, not a lot of info out there from what I've seen. Leveraging interactive brokers TWS platform for algo trading. Okay, wow. Anyways, trading strategy using VWAP. Okay, VWAP and Heiken Ashi. This is on we got here combining Heiken Ashi candlestick oscillator VWAP on TradingView, analyzing Euro, USD, and XRP. Charts identifying potential entry exit points using these indicators. Template for the strategy, promising results on both pairs. But again, the market changes. So the time looked good, may not be looking valid anymore. Expand testing and consider Python implementation for mean reverting markets. Because I think let's be real. I think mean reverting is going to be here more than standard trend following and momentum based. Okay, real time risk monitoring. Changing buying selling orders again on the interactive API. Now again, using this TWS link, which is no more, but it showcases what you can do with something like this. The complexities of changing selling orders using the interactive brokers API. Lack of clear explanation in the documentation. And again, we got to watch the order ID, parent ID for placing and modifying these orders. So this is using C# with that TWS link. I think I talked about this earlier. It's invaluable. Unfortunately, just the TWS link software doesn't exist anymore. Next up, we got order management for interactive brokers API. Order management, order types, market, limit, stop, demonstrate order placement and status checks using the C# API. As I said, most likely the C++, C#, Java APIs are similar. How to modify or cancel existing orders, tips on accessing historical and subscribing to real-time market data. This has changed because you have to use other data sources because unless you're willing to pay interactive brokers for the data, that's changed. That's where they're making their real dollars is access to market data. I mean, if you have an account size, that's all free. Resources valuable for seeking to leverage the interactive API, interactive brokers API for efficient trading. Okay, so something back. I mean, this is long and drawn out. Crypto trends, volume, weighted average. Again, crypto trading metric, volume, weighted average. This is using Python, calculating the average price movement of major coins. Obviously, Bitcoin, Ethereum, over an hour, weighted by trading volume. Positive values signal potential uptrends. There's so many of them, and being able to do it predictably, consistently, while negative suggests downtrends. Strong markets offer better trading opportunities. That's where Bitcoin is no longer that. You can still take the same techniques and apply them to other markets that are consistently bringing in positive momentum. Another one not mentioned a lot is standard deviation, risk management tool, statistical measure of data spread, unveils risk assessment for investing, walks through the calculation formula, result, interpretation, and real world usage example. Powers leverage, standing, deviation for informed investment decisions. Stress testing. This is the other one I talked about, those market simulators. This is the deep in the weeds concepts. There's a project out there. Again, I looked for it, can't find it. But if you can find it, set it up in an Eclipse IDE, you run it and generate simple data. And again, you can backtest with it. Another video for HFT backtesting level, installation setup, and including order creation, order book viewing, and simple data generation. It's the order book viewing that's the critical point. Simulator is available for control, testing, and limited documentation of potential limitation. Okay, so I said that that's no longer around. There's another one that's available. Okay, so same concept here. Java-based stock exchange simulator, introducing the features, guiding viewers how to import it in Eclipse, running the program, and generating sample data. Powers you to test trading strategies in a safe environment before deploying them into the real world. So that's another way of saying, is there a need to test or back test? Whereas you can do this in a simulator. So again, you can explore, this is available on SourceForge. It's old, but it can work. Open source peer-to-peer trading network used by financial institutions that you set up and control. That is a secret weapon right there. Can't say it anymore. 1.5 hours into it, and that right there is part of the secret sauce of this video series. Okay, so now we get into the specific languages of C++, Python, Excel VBA, C Sharp and .NET, and it goes on. Okay, uh, there's just so much here. It's crazy. Okay, so let's start with a C++. Okay, continuing along, using modern programming and platforms as said, we've already covered a lot of the different examples of TradingView and Motivate. So now, specifically for C++ performance optimization or techniques. So this one is uh, guiding viewers through interactive brokers using C++ and covering TDWS, gateway and socket client, which you don't hear a lot of, the environmental setup, library installation, and order placement. So you'd use something like an ActiveX on Windows and socket clients in the TWS Trader Workstation configuration using some, if you need a demo account, that might not be no longer the case with this older video. Resources are valuable for those seeking how to master Interactive Brokers API with C++. This is the interesting one when it comes to CUDA and GPU for NVIDIA. Delves into high frequency trading techniques potential with a focus on graphical processor unit acceleration, introducing the NVIDIA CUDA Tesla board, or one of powerful GPU suitable for HFT, some would think. Uh, X version 2 C++ library takes center stage, enabling parallel processing on GPUs. Challenges of migrating R with CUDA, which could still happen. I don't know. CUDA for HFT, because at the time when I looked at it, there were examples of trading applications using CUDA. That's the library, proprietary library to use CUDA and the GPU functions of NVIDIA. Video highlights the CUDA library potential applications in this field. Resources valuable for those seeking to leverage GPU power for high performance trading strategies. Another one is focusing on Boost and QuantLib. Boost Accumulator, C++ for efficient statistical computation. Boost is another big one. Boost Accumulator library, valuable tool for incremental statistical computation in C++. Concept of accumulation and their efficiency to handle large data sets. No different than GPU with CUDA. Simple example of a mean normal distribution is demonstrated. Videos offers a glimpse in the Boost Accumulator library and potential applications for quant finance. So then there's boosting Python, basically bridging C++ to Python. So using Boost Python, powerful tool for interfacing Python with C++ libraries. Breaking down the components of a Boost Python demo, including the C++ library, Python script, and making the file. Demonstrate building the C++ library and running Python scripts to invoke it. The video also showcases wrapping C++ class in a Python module in a seamless function call. Valuable for those seeking to leverage combined strengths of C++ and Python. Okay, now let's look at, as I said earlier, what a lot of institutions use is QuantLib, a free open source C++ library for quant finance, a pioneer and framework API for this field and great starting point for those new to C++ and quant libraries. Uh, Showing how to install it, the dependency management, and building basic applications that calculate bond present value. So these are simple examples, simple installation, but it's vast. It's very uh, sophisticated, very complex. But a lot of institutions use it. Empowers those interested in quant finance to take their first steps with quant lib. All right. Um, Step-by-step guide on how to use the C++ API with interactive brokers for TWS, Trader Workstation Support in Linux. There's another video. This is rare to find at the time. It's a big breakthrough. I've been trying to figure this out for a while at the time. Found a project in GitHub with moderately okay documentation that helps to get you started. Now, this may have evolved again. Step-by-step guide in your environment, install necessary libraries, configure Interactive Broker's API settings to place a single order using the C++ library. For anyone who wants to use the C++ POSIX or Linux API with interactives for TWS support on Linux. Going back to GPU, integrating the Interactive Broker's TWS C++ client with GPU CUDA Tesla compute cluster. So again, that's NVIDIA. Again, this is older. Is it still valid? Don't know. Can't say. But here's a demo of it back in the day. Steps to download, configure, and build the C++ project. Explores the advantages of GPU acceleration for HFT needs and provides insights with the Tesla compute cluster. Wow. And then next up, we're coming up to Python in 1 minute. Again, using Interactive Brokers API, changing and selling an order. Very complicated to do. But as I said, there was this one tool that's no longer available, TWS Link 2. Complexities of changing and selling an order using the API for Interactive Brokers. Emphasizes the lack of clear explanation of both TWS Link and the Interactive Brokers documentation. Covers essential parameters like order ID, parent unique, and demonstrates using the C# API for these actions, offers tips on that package. TWS Link, configuration for optimal performance. Okay, let's get into Python. Learning Python tips as well. Mastering Python, critical skill in the age of machine learning. Uh, Leveraging online resources like YouTube, GitHub, and Stack Overflow. So it's kind of like just tips, I guess. Problem solving and project creation. While acknowledging time investment, competitive landscape, have to understand the different design patterns and data structure. Okay, so back in the day, there was data science. Um, Valuable article, 10 great Python resources for aspiring data scientists. Must resource for seeking to embark on a data science journey with Python. Recommended article, gain insights to discover the essentials for mastering Python in data science. Python libraries for trading. This includes the standard pandas, numpy, and scipy. So here, clear path to install Python and essential libraries like, as I said, scipy, numpy, pandas, MATLAB on Ubuntu Linux. This is older. Now, again, VirtualBox was the thing before Docker. People use Docker. So you would use back in the day VirtualBox at apt-get. Viewers can quickly create a Python environment for data science and machine learning tasks. Covers pip for package management and demonstrate practical applications with PyCharm and IPython. Python data science environment on Ubuntu. This is key here. It's old. Viewers installing Python and all these libraries, SciPy, NumPy, Pandas, and Matplotlib on Ubuntu Linux with VirtualBox. Prioritize the method of quick start in data science and machine learning. Covers virtual machine installing, again here, Python 2.7. Now it's at 3.13, who knows? Via apt-get pip for library installation and exploring Python and libraries in both IPython and PyCharm. Again, we talk about the technical analysis building blocks, which leads into automated trading. explains technical analysis is valuable, complemented for fundamental and statistical analysis, which we already talked about. Setting up technical analysis scripts with Python and buy and sell signals. Importance of a database for starting and tracking technical analysis data. Resources valuable for those seeking to understand the foundations of automated trading through technical analysis. Okay, so now we're going to use Excel VBA or Excel for less technical people with MATLAB. So you want, let's say you want to stream real-time financial data from something like Yahoo Finance, and there's other sources now that this software would support. MATLAB using this add-in for Excel. Um, IQ feeds one data source that's still supported. Record macro to capture the VBA code. Starting again, this is MATLAB. This is kind of old. Within Excel and adding the package, the add-in, and modifying VBA code to call it MATLAB functions needed for data processing. The video covers the setup, MATLAB function configuration, data streaming, and visualization in MATLAB. Good for those wanting to leverage real-time financial data in MATLAB. So again, using QuantLib, there's an Excel add-in. Using Excel with the quantitative finance. Now, I don't know if this is still um, current or valid or supported in the current versions of Excel and QuantLib. It does exist, that I know. Valuable tool for quant finance pros. There is an Excel add-in for QuantLib. Easy access to the QuantLib C++ library function. Video demonstrates the usage by calculating present value of a bond. Resource ideal for those seeking to leverage the capabilities of QuantLib within a similar environment that they're used to with Excel. Building Excel C# trading systems. So there's a pivotal automated trader showcases his model using Excel for calculating and C# for the automation. Video details how historical data from IQ feed populates the Excel spreadsheet and has indicators like stochastic and average true range generating trading signals. Outlines the plans to connect C# to interactive brokers for potential order placement and data management for market activity. This is one example of many, as you can see here, and already pushing a 2-hour video on some of the, I mean, this is getting the majority of it. Another one for Excel. Excel powered market data analysis with that plugin or add-in. Powerful tool for connecting real-time market data and performing technical analysis, all within Excel. Demonstrates the integration of IQ Feed, a market data provider, and guides viewers through the viewing real-time stock data in Excel. Can you imagine? No programming needed. Technical analysis functions like moving average and RSI are showcased. Video also explores the COM API option, if it's still supported, to connect from C# or C++, and demonstrating real-time and performing technical analysis within those languages for both C# and C++. Video is valuable for anyone seeking to leverage this tool for market data access and analysis. Another one, this plugin, same plugin add-in, accessing real-time market data, and that plugin is still current. For market data, well, we know Yahoo MSN doesn't work anymore or support it, doesn't exist. And then another example is with IQ Feed. Utilizes the plugin, the fuel, if you built out, let's say, MATLAB Simulink models, um, and gives you access for historical data retrieval, real-time quotes, charting, technical indicator calculations with stock screening, all within Excel and different Excel spreadsheet examples. Compatible with Excel, MATLAB, and other languages, empowering traders and analysts to access and analyze real-time market data effectively. And I have to also stress that that is going to be Windows only. That's one of the reasons why I always go back to Windows, because of that. It has the best support for all the necessary software you want. Otherwise, you got to go into wonky world and Linux and kind of sometimes with Mac OS as well. Um, okay, so we have C Sharp. So we have another piece of software showcasing real-time market data. Again, IQ Feed as an example. Um, yeah, we already gone through that. So we have .NET framework for trading applications, C++, C Sharp, Java, quant research. So we compare all those languages for quant research, focus on high frequency trading and automated trading. Looping test mine performance differences between the languages. Discussing the advantages and pros of each. C++ for performance, C Sharp for rapid development, and Java for cross-platform compatibility. Lots of choices there. Again, as I said earlier, it really comes down to what you're comfortable with and what operating system you want to be on and the like. Ultimately, the best language for quant research depends on individual needs and preferences uh, as well. So let's say if you have C Sharp and Excel integration, tutorial here demonstrating a .NET app leveraging C Sharp for financial markets as a guide. Now take a look at the date, the versions here is of Visual Studio 2010 and Excel 2007. That's how old these are. Acquired capability exists with Visual Studio 2012. So you will have that. I can't say in the current version of Visual Studio what works, what doesn't. There's an environmental setup, like library installation, Excel configuration, and placing an actual order through the C Sharp API. So it's basically to bridge the gap between C Sharp and Excel with a .NET application. Um, okay, so I've talked about this piece of software here, TWS Link 2, a gateway to a convenient programming gateway to interactive brokers. Unfortunately, it no longer exists. It enables you to interact with the TWS platform, walks through the installation, configuration, basic functionalities like connecting to TWS, Trader Workstation, placing orders, and checking order status. There's other ways to do it. You could do it through Python somewhat as well. TWS features into this application. Um, so it basically, if it existed and was still supported, TWS Link 2 for seamless interaction with interactive brokers. Okay, let's talk about uh, tail end of this. Um, so let's talk about different operating systems. We have Windows and Apple, Mac OS. Uh, we have to look at security of each, private options, and also obviously there's privacy scandals. If you're worried about that, one good option is OpenBSD, which is a highly secure, very secure Unix-like operating system known for its security features. Now, if you want more of a pretty Linux distribution, which is on the desktop, Manjaro may be a good option. Deepin as well. With some options there demonstrating that. So yeah, to understand the OpenBSD is an advantage to be on and something to consider if you're very advanced. Um, so again, here we're trying. This was a live streamed video rewarding project development journey. Uh, this project was brought to completion. So there's a point here. Skip to the 45-minute coding segment, instructions, console commands, and there's also links that you can get um, if they're valid or not. Uh, yeah, so that can be a valuable resource. Now, this is the last video. You can see here, talking about cloud computing. I do not talk about AWS, Google Cloud, or Azure. Reason is because I've used and tested something like Vultr, VULTR, with the demo here of installing Windows Server 2019 into a Vultr cloud environment. So I log in my account, create a new instance, select Windows Server 2019. There are other more up-to-date versions, but as you uh, use the newer editions, they get more complicated to add security. So you go over configure settings, how to deploy the server. After the installation, there's a demonstration login, keyboard using keyboard shortcuts for remote access. A remote access is the key because it's a cloud environment, password management. So this would empower anyone that wants to install a version of Windows Server onto Vulture's cloud platform. And yeah, it's good. And most of it's Linux, like different Linux distributions. And as far as I know, there's no GUI option when it comes to any of the Linux distributions that are supported on Vulture. The only if you need graphical user interface, you have to use Windows or Windows Server. It's the only other option. So that's pretty well the whole course. As you can see, it's very vast, coming up to 2 hours. So I think it's valuable regardless of how old some of the videos are. As I said, if you're interested, get on my email list. I'll put you into a series once we launch. Offer it to you. I'm not sure how much the course will be, but I'll put out another email on that schedule. Um, so this is the actual course. That's what the video focuses on for this one. And yeah, make sure you get onto the quantlabsnet.com/registration to get on our email, and that will put you into an email sequence to introduce you to getting to talk to me, or there's a lot here. Needing to know how to customize it and how to get access to this course as well, which will lead into bigger and more up to date current stuff, programming and a quant side. Other than that, thanks for watching a complete 2 hour video. You got to the end. Congrats. Later.